And welcome into your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial investment and retirement future. He is president and founder of McIntire Retirement Services. Chris McIntire here with us. And it is always a pleasure, Chris, today talking about some important elements of our game plan for retirement, sort of the foundational pieces, in fact, the Social Security, Medicare benefits, how to make sure we're making good decisions and making the most of those entitlement benefits. So pleasure to have you on here, Chris. Good to see you again and look forward to the conversation today.
Yep, sounds good, buddy. And, the tip of the week is, many of you have worked, 35, 40 years, saving for retirement and whatnot. So, hanging with us for 30 to 40 minutes here as we go through Social Security and Medicare. You'll find it well worth your time.
Well, it comes to retirement in America, Chris. These two systems are depended upon by many. In fact, I've seen stats that say 40% of the retired public are living on Social Security alone. And I know for a lot of your clients, that is not the only source of income, but still a very important one. And a lot of people make kind of quick decisions without getting all the information about Social Security.
Yes, and they're not real sure where to get the good information either, right? They're playing golf with their buddies or they're playing, cards with the ladies. And well, I took it at 62 because you don't know how long you're going to live, or I took it at 62 because it's going to run out of money. And Social Security does not run out of money. It is funded by payroll taxes. So unless everybody stopped working, it wouldn't, it can't run out of money. It is funded by us putting efforts into it. And obviously, it's probably fair to bring up early in the show. Yep, it does have some funding issues that need to be resolved. And, and I get the frustrations, right? We're here, dealing with trying to fund the Department of Homeland Security. They can't get that done. How in the hell are they supposed to fix Social Security? But, I want to have some faith in the system. So for the purpose of today's show, let's have faith in the system, and then we can go back to
Well,
thinking.
I think it is a fair concern, though, Chris. I mean, they've been telling us for more than a decade in bold print right there on the front cover of the statements when they used to mail them out, and now they don't anymore. Maybe so they don't have to make these statements. But that the Social Security system would not have enough in the trust fund to fund full retirement benefits. And so we sort of need to keep that in mind. And of course, the sooner they address that, the better the solution. But they won't. They'll wait until the day after the last minute to come up with a kumbaya. We finally have done something about this thing. But even that concern tells me that it's much more important for me personally to make a good decision about it. Because if I make a mistake and reduce my own individual benefit, and then the system has some issues and benefits are reduced further, that's a double whammy that at least I could have avoided on my end.
Yeah, that's a very valid point there. And Peter, you and I are both self-employed, so we're paying both halves of the Social Security. So we obviously want it to be there, and as does everybody listening to the radio show today. And unless you're a school teacher and you get your pension from the state teachers retirement, or even some of Ohio's public employees, in the state of Ohio, they public employees do not pay into Social Security. Federal employees do. Members of Congress pay into Social Security. That's a big misnomer that a lot of people have. Well, they're not worried about it because they're not going to get it. Oh, yeah, my uncle worked for the federal government. He gets Social Security.
Yeah. Well, the Social Security, Medicare are foundational. Decisions are permanent, and planning matters. So we'll talk about strategies to create better outcomes on today's program. But of course, Chris McIntire puts together the game plan for retirement for clients and candidates there at McIntire Retirement Services. And if you would like to get your game plan for retirement, the written document addressing income, investments, taxes, healthcare, legacy, and how all of them are interconnected for you and your situation, consultation on a complimentary, no cost, courtesy service basis. Just pick up the phone, get the conversation started with Chris and the team from McIntire Retirement. 419-332-0532. 419-332-0532. 419-332-0532. So, Chris, I mean, we've got this question: do I have enough? Am I going to run out of money? That's a very common concern that we hear. Social Security, therefore, is very foundational because of the consistency and reliability that it provides us for retirement.
Yeah, without question, and it offers a cost of living adjustment, so it typically is going to increase as you go through retirement. And, is it perfect? By no means is it perfect. Nothing is perfect out there, but this is probably piece number one of a retirement foundation for millions of Americans who need to rely on it significantly, to avoid, running out of their money. So, where we help people, I'm part of the National Social Security Advisors Association, the NSSA. And, we go and do our continuing education. We take classes. We have software to help people evaluate, the different filing strategies. Do I take it at 62, at 65, at 67, and at 70, and all of the ramifications of that? Because, none of us know exactly when we're going to pass away. If we did, then we would know when to take Social Security.
But Chris, the difference in some of those different ages, like going 62 to 70, over the course of life expectancy for a married couple, you've seen where this has made the difference of several hundreds of thousands of additional dollars that either come from Social Security or we have to withdraw from our personal assets and investments, or just aren't there at all. So again, 30 to 35 years of building toward this benefit, this moment, and this decision to claim, it certainly merits 30 minutes, an hour of time to make sure we're making a wise and informed decision on that, especially with the difference that it can make in that income and what we get from it.
Yeah, no question about it. And in addition to a husband and a wife and spousal benefits, there's even divorce benefits that can be available, widows benefits that can be available. Now, if you've never been married, that selection process gets a little bit easier because, they typically are going to take it earlier than later, right? Because, you take Social Security at age 70, if you've never been married, nobody's going to get the benefit beyond you, and you get hit by a bus a week later. You're not going to get anything, or, your estate's not going to get anything, $255 for your death benefit. So, a lot of times those folks will take it earlier because they want to make sure they're getting something out of it at least.
Yeah, and with all of those considerations, you had earlier mentioned the COLA, the cost of living adjustment. I think that is an appreciated feature. But again, Chris, most of your clients probably Social Security not the only source of income they are relying and depending on. So only the Social Security portion is going to get that cost of living, and usually that even does not truly keep up with inflation, right?
That is correct, and so many of our clients, obviously, we're going to file, we're going to help them find that correct strategy that best fits their needs. Doesn't mean it's right or wrong. Again, a lot of variables you don't know about. I know how your health is going to hold up when you're going to pass away. But then they've also, are typically going to be having a 401k in their retirement plan, or a Roth IRA, Roth 401k, additional savings that we can also utilize and carve pieces of them off and create even more income and invest for growth. So, a number of different elements that we can help people implement, to maximize income in their retirement.
Good point there, Chris. Do you believe, do you feel, have you seen where Social Security can actually be a pretty effective tool to protect more of our personal net worth and assets, the dollars that we can pull in and pull out and reach into and pull out of in case of emergency, the dollars that will pass on to our family as a legacy? Is that the most effective utilization of Social Security to protect that?
Yeah, it certainly can be. Having different options. Like we just don't want to have one plan in place. We want to have plan A, this is might be the primary plan, and here's plan B in case something happens to plan A, like a stock market correction, right? Can we shift over and turn on another income source other than out of an investment portfolio? Do we have a safe money strategy? Do we add another annuity to continue to get that contractual guaranteed lifetime income and meet those basic living expenses, and then free up money in the investment portfolio for, longer term growth to combat inflation, to replace the money you're taking out of the annuity, as an example.
Now, Chris, are most of your clients also paying tax on their Social Security?
Yeah, that's a very good question, Peter. And by and large, as people have bigger IRAs and 401ks, and, they're still paying mortgages off and car payments, it's very common that people pay some form of income, some income tax on some portion of their Social Security benefit. So it's kind of graduated, Peter, as you know, that, the more income you have, the more of your Social Security that you will also pay income tax on. But currently, the worst case scenario is you would pay income tax on 85% of the Social Security that you receive.
Meaning 15% of it would be tax free.
Yeah, yeah, and doesn't that sound fair?
Right. Well, so to me though, that is another reason why we need to strategize and maximize our Social Security benefit where possible, Chris, because if we've got a $20,000 benefit, then only $3,000 is tax free. But if we've got a $40,000 benefit, 15% of that is six. There's more tax free income as a result of having waited for an even higher Social Security benefit, and therefore less reliance on our personal assets. If our budget and spending is 80,000 and we have claimed early and we're getting 20, then we've got to pull 60 from our IRAs and less tax-free income from Social Security. But if we wait and have more Social Security income, not only is there less draw from our IRAs, but more of the income from the Social Security itself is tax-free. So like the benefits multiply, don't they?
Yeah, yep. It's a very good point you bring up there. And, and delaying does help you get more income. And then survivor benefits, obviously, that helps if one of the spouses passes away, the other one can step into the higher paying Social Security benefit, thankfully. And, they could very easily make Social Security income tax free for retirees by increasing the amount of taxation on the people that are working, that are putting money into the surplus. So
couldn't they, though, just as easily make it 100% taxable if they say people are making too much money in retirement, Chris?
oh yeah, yeah, means testing is mean.
Yeah. Yeah, and they're already doing that with Social Security, essentially, with the different tiers of taxability. If you make this much, 50% taxable. If you make much more than that, 85% taxable. And they're doing that with Medicare as well. We'll get into that in just a moment. But like all of this to say, Chris, I mean, the lifetime income, the survivorship income, the amount that you're withdrawing from your other investments, the taxes that you will pay, all of this makes it a compelling case that people really need to strategize on Social Security, not just rush out and claim it. And oh, by the way, folks down at the Social Security Administration office, Chris, they don't offer a lot of proactive guidance on these aspects or these questions.
That's correct. Yeah, if you've been previously married, they may say, hey, you're eligible for a higher benefit off of your ex-spouse if you were married long enough and qualify for that. I think you have to have been married for 10 years to be able to qualify for divorced spouse benefits. And then, if you had been widowed, you can certainly start Social Security off of your spouse's benefit at age 60. But another thing that you could do is start your own benefit at 62, pick up your spouse's benefits later because they might be greater. So there are many different options out there that, it's nice to be able to show people all the choices that they have, especially when they don't know them,
Yeah.
And most people, a lot of it's hearsay or, they're listening to our program, they're reading articles in newspapers and, hearing things at different types of seminars and whatnot that they go to. And, I always laugh when the client says, "Well, I went to this seminar," and I'm like, "Oh boy, here it comes."
Yeah, yeah. However, Chris, you mentioned, widows claiming at 60. You can claim your own benefit as early as 62. Just a word of warning there, though. Uh, if you are claiming out of necessity, then you can claim. But if you are still earning income, capable, able-bodied, out there actively still earning income, there is a red flag warning there that people need to be aware of if they are going to claim at those early ages, even for widows, right?
Yeah, that is correct. You have to watch how much income that you have from earnings, wages, prior to turning your full retirement age. And I'll give you an example. My wife is 65 years old, and at 62, we started her Social Security benefit. And because we work in the business, we only pay her the minimum amount just to stay underneath that. So we get Social Security, and then we pay her the minimum, the maximum amount that she can earn while collecting Social Security before her full retirement age, and it's in the ballpark range of about $24,000 this year. Yeah.
Yeah, adjust every year a little bit, but not very generous amount of income that you can earn before you encounter that penalty prior to full retirement age. Now, all bets are off at full retirement age. You can work and double down and claim and collect Social Security, no penalties beyond that point, right?
That is correct. Yep. And that begins the month you turn your full retirement at age. It's not at the end of the year, it is the month. So if you have a birthday in January, February, and March, you're in pretty good shape there because the year you turn your full retirement age, you can make a lot more money than you can the year that you turn 62.
Yeah, but if you've got a November, June, July, November birthday, you might have to beware of that, right?
Yeah, you may not be able to file until later in the year then because of that. Yep,
Yeah.
depending on how much income that you have.
All right. Well, again, we are talking with Chris McIntire, president and founder of McIntire Retirement Services. And again, ladies and gentlemen, he puts together your game plan for retirement, bringing together all the aspects of a comprehensive plan: income, investments, taxes, healthcare, legacy, order of operations, where to draw from, how much risk you're taking, what fees are you paying, what taxes will you be liable for, how can you control them, and how can you maximize the dependable income, including certainly Social Security strategization, including certainly Social Security strategies to maximize that income. So give a call if you would like to start the conversation. 419-332-0532, 419-332-0532. Even if it's just looking at that Social Security, certainly worth the time and the conversation. Retirement entitlement benefit number two that people depend on, and a lot of misunderstanding about what all it covers, Chris. Medicare. Medicare is a staple. It is our primary insurance once we are retired and over 65, but there's still a cost to it that people don't understand, and a lot of misconception about what it covers.
Yeah, without a doubt. And Medicare is basically the government run healthcare plan for those who turn 65 and older. Now, we're not going to get into the disability side of all of this for today's show, just the standard Medicare. And so Medicare is health insurance for people that are over the age of 65. It is not long-term care. Medicare does not pay for you to spend time in a nursing home, only a certain number of days.
Yeah. Yeah, and really kind of just the baseline premiums for standard care. Part A is what the hospital, Part B is sort of the doctor's visits within limitations, and then Part D is the drugs, and then there's all kinds of letters on down to G for the supplemental and advantage plans, Chris. So all that said, this is not just cut and dry, okay, well, let me get my Medicare. A lot of decisions have to go into this process.
Yeah, without a doubt. And again, my wife just turned 65, so we'll use Robin as an example here. So four main components to Medicare, okay, to start from step one is there's A, B, C, and D. So just like Peter was saying, A is what you're paying for out of your wages. That covers the hospital side. That's free. Okay. Now you have a little bit of deductibles in there. Okay. Then you go to Part B, which covers your doctor visits, your wellness checks, things like that. And Part B from the government side covers 80% of that bill. Then you buy a Medigap policy, which has more letters to choose from, and F and G are very popular to cover that 20% gap. So you might hear Medicare supplements or Medigap policies. Okay, and then the traditional Medicare is Part A and Part B, and then you add on the prescription drug benefit that is Part D. Okay. And then, if you want to go more on the private side, that would be the Medicare Advantage plan, where you hear Joe Namath and some of these people on the commercial saying they're going to add money back to your Social Security. They do not. They deduct money from your Social Security under any Medicare options you take whatsoever. They do not add money back for you.
However, Chris, most people have costs for healthcare in retirement, even baseline routine costs for the premiums alone for this insurance coverage. We're not even talking about the copays and the deductibles and the out of pocket. The premiums alone have a cost. A lot of times that's just deducted from our Social Security, so we don't get as much Social Security as we thought. Again, where all of these things interplay and depend on each other. But if we make too much money, then the Medicare premiums begin to cost even more. And this surprises people, catches them off guard. Irma.
Yeah, without a doubt. And, again, use Robin as an example here. So, we still have the business income and whatnot and, achieve a little bit of success, if you want to call it that. And so I think in 2026, they take out about $209 and change out of your Social Security benefit for Medicare Part B. Then you go out and buy your supplement plan as well. And then you buy your prescription drug benefit. So with our business income, Peter mentioned IRMA, and it's I got to read the acronym on that. I can never remember it. Income related monthly adjustment amount. So for my wife, they take over $500 a month out of her Social Security benefit for Medicare Part B. So we call that means tested. So she suffers from the IRMA penalty. I'm going to call it a penalty, I guess. Yeah.
And Chris, for your clients who have done a good job saving, investing, building up those IRAs, IRMA is a real factor. And in fact, the government can almost force this penalty upon us when they are also forcing money out of those IRAs with required minimum distributions. Again, how all of these things play into each other is really fascinating to me. How the IRS seems to have figured out a long time ago how to hit seniors especially hard.
Yeah. There are some tax traps that people fall into. So, this brings into the conversation of, doing Roth IRA conversions before you hit age 73 with required minimum distributions and even before age 65 if you're going to, be retired and take Medicare. My brother-in-law, for example, he worked until age 67. So he had employer health care until he retired, and then he went back onto Medicare. So, there are a lot of different ways that this shakes out for folks, but you take the average person who retired at 62, okay, and then filed for Social Security benefits, and then they hit age 65, they go on to Medicare, and so this year that would be another $200 less coming out of their Social Security benefit, for the Medicare side of things. So you have to remember that if you're going to go at 62 with Social Security, at 65, you're going to get less money, not more.
Yeah. Some good news though for those over 65, Chris. The standard deduction does have a little bit of a supplement, and with the one big beautiful bill now, the enhanced senior deduction for that extra $6,000 per person offset for Social Security taxes.
Yeah, it certainly helps here for a few years, and we will see if those things get made more permanent down the road. Legislatively, obviously, powers that be in Congress, the Senate, and the presidency certainly have an impact on this. An example is, required minimum distributions used to be 70 and a half. Now they're age 73. They eventually go to age 75.
But because we have those extra years, Chris, should we wait and default to the IRS's plan? Or with everything that we've talked about today, taxes on Social Security, IRMA on our Medicare, wouldn't it make more sense to be a little bit more proactive with our own tax planning, enacting the plan that is in our best interest rather than the one that is forced upon us by those required distributions?
Yeah, you're absolutely right. Your plan is typically going to be tailored around your needs, not the default of the state or the federal government in most cases, for sure. It's like that's why you do estate planning so that you don't have to deal with the probate system and things like that, which is kind of the fail safe. So your estate plan, your Medicare plan, your tax plan, your investment plan, all need to be tailored to your specific needs. And that's what we can do to help folks out.
Well, the bottom line, the big picture, coordination is key, ladies and gentlemen. Social Security can be taxed and impacts taxes. Income from all sources impacts your cost for healthcare. If you have a healthcare event, then you have to pull more out of those accounts. That can impact taxes. Those RMDs, you start pulling more out because of those. That can impact your healthcare costs and premiums. They're all interconnected. Looking at anything in isolation is not looking at the total picture, not the most effective way. And that's why coordination of all of these is so important. Chris, for decades, many people have had access to the market and focused on investments. What investment are we choosing? What is the rate of return? And not to minimize that, that has been an absolutely important part of our financial progress. But as you have stated on this program many, many times, it is not the full picture. And just having a simple conversation about how Social Security and Medicare actually work, I think illustrates the need that we have for more comprehensive conversations about planning.
Yeah, yes, absolutely. Because everybody has, different objectives and goals, risk tolerances, income needs, and take into health considerations. A lot of factors go into some of these very, very important decisions that in a lot of cases are irreversible.
Yeah, permanent decisions, not even just your lifetime, echoing after your lifetime with your spousal income dependency, what a spouse would be left with after the fact, what your children, your beneficiaries, your legacy value is after the fact. So these decisions that you're making at 60, 62, 65 will impact for decades beyond and even lifetimes beyond. So make sure you're making well thought through, informed decisions. Social Security and Medicare are two of the most foundational components of retirement in America. And many times, far too often, people are making these decisions without understanding the full implications, how they work in the context of our full picture, what the end result will be decades later. So make sure that you have worked your lifetime to qualify for these benefits. Make sure you're making the most out of them. Give Chris McIntire a call and get your game plan for retirement. That number, 419-332-0532, 419-332-0532. You can also go online, McIntireRetirementServices.com, McIntireRetirementServices.com. Chris, always a pleasure having you here on the program. Thanks for a great conversation. Thank you for helping the proactive savers and investors in, across, and throughout Northwest Ohio.
Yep, my pleasure, Peter. Yep, thanks for listening, everybody, and may God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Chris McIntire and McIntire Retirement Services are not affiliated with or endorsed by the Social Security Administration or any other government agency. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.